welcome back to Global Value. Today we are going to be looking at Unilever PLC. We will be performing a fundamental stock analysis based on looking at Unilever's financials. So Unilever is a British company that trades on both the London Stock Exchange as well as the New York Stock Exchange. On the NYSE, Unilever trades under ticker symbol UL. Ticker has Unilever's ticker symbol as UN. However, all the supporting data is actually ticker symbol UL from Unilever trading on the New York Stock Exchange. So before we get into analyzing Unilever as a business, let's remind ourselves of the 4 principles of value investing. So principle number 1, when you are purchasing a stock, really you're purchasing an ownership share in a business, and over long periods of time, your stocks are going to return what that underlying business is able to return. Principle number 2, Mr. Market is there to serve you, not to educate you. Price is what you pay, but value is what you get. Principle number 3, you need to maintain a sufficient margin of safety in all your investments just to make sure that your downside is protected and to give you superior risk-adjusted returns on the upside. And value investing principle number 4, in order to minimize mistakes, you need to stay within your circle of competence and only invest in businesses that you truly know both inside and out. So taking a look at Unilever, currently they're trading at $60.50. Over the past year, their stock has increased about 3%. Over the past 10 years, Unilever has returned about a 7.5% compounded annual return. Unilever makes up part of the Fundsmith portfolio managed by Terry Smith. Terry Smith has been called the British Warren Buffett, and in the most recent Fundsmith annual meeting that was hosted online, Terry Smith had some not so nice words to say about Unilever's management, but he was very bullish on the business as a whole, and he especially liked how they were developing in emerging markets. Some of Terry Smith's perhaps not so nice comments came as a result of Unilever's failed $68 billion bid for the consumer health unit of GlaxoSmithKline. Scrolling down, we can see that their market cap in British pounds is 87 billion British pounds. Converting this to US dollars, that's a market cap of 114 billion US dollars. So a $68 billion bid for another segment of a company was more than half of their market cap. They were really going to bet the company on this acquisition, and it was an acquisition into the consumer health space that Unilever frankly did not have a lot of competence in. They had not had prior business experience dealing with some of the regulations and compliance issues in this space or marketing those kinds of products. It was fair to say that that kind of acquisition would have been outside of their circle of competence. And after following the story in the news and listening to Terry Smith, I think he was right to criticize current management. Now, looking at how the stock has been trading, currently their price is $60 a share. That's $3 off of their 52-week high and about $18 above their 52-week low. For some background on Unilever, Unilever PLC is a diversified consumer goods company. It operates through 3 segments: beauty and personal care, food and refreshment, and home care. These segments make up 42%, 20%, and 38% of sales by value, respectively. Its brands include Knorr soups and sauces, Hellmann's mayonnaise, Lipton teas, Ben & Jerry's, Breyers ice cream, Axe and Dove deodorant and skincare products, and the Tresemme hair care brand. The firm has been acquisitive in recent years. High-profile purchases include the mail-order men's grooming business Dollar Shave Club and 7th-generation cleaning and personal care products. The business was incorporated in 1894 and is based in London, United Kingdom. Now that we've gone through the principles of value investing and gotten a background of the company, let's dig right into our fundamental analysis. So starting off with pillar number 1, we're looking for Unilever's 5-year average PE to be below 22.5. Looking at the chart, we see that their 5-year PE was 20.4, so that's a check, even though that their current PE is just shy of 24. Moving on to pillar number 2, we're looking for the 5-year average return on capital to be above 9%. We see that even though their return on capital is slightly decreasing over the past 5 years, they still do a great job here. They average about 21% return on invested capital, which is more than twice as good as the metric that we're looking for. Moving on to pillar number 3, we're looking for 5-year revenue growth. All of these currency values are going to be displayed in US dollars. So here is going to be our first X. In 2017, Unilever had $64 billion of total revenues, and that shrank to just under $60 billion in 2021. Pillar number 4, we're looking for 5-year net income growth. In 2017, Unilever had $7.2 billion of net income. In 2021, they had $6.8 billion of net income. So that is another X there. So far through 4 pillars, we have 2 checks and 2 X's. Pillar number 5, we want Unilever to be decreasing their shares outstanding. In 2017, Unilever had 2.8 billion shares outstanding, and in 2021, they had 2.6 billion shares outstanding. So they have been buying back shares. That is going to be another check. Pillar number 6, we're looking for 5-year free cash flow growth. So in 2017, Unilever had $6.7 billion of free cash flow. In 2021, they had $7.3 billion of free cash flow. So that is going to be another check. Please ignore the free cash flow estimates for 22 and 23. These past 5 years have been actuals. These 2 are only estimates. Wall Street guidance has little to no way of knowing what's actually going to happen with the company. But going back and filling in 2018, they had $5.7 billion of free cash flow. In 2019, they had $7.4 billion of free cash flow. And in 2020, they had $9.2 billion of free cash flow. So this comes out to an average 5-year free cash flow of $7.25 billion a year. While we're looking at cash flow, I mentioned earlier that Unilever's growth has come primarily as a result of acquisitions and that they've been quite acquisitive. Taking a look at how this cash flow has been broken down, we can see that Unilever has spent quite a large amount on cash acquisitions. They shelled out nearly $6 billion in 2017, $1.5 billion in 2018, another $1.2 billion in 2019, $1 billion in 2020, and $1.2 billion in 2021. So they have been spending at least $1 billion a year on cash acquisitions over the past 5 years. So they've really needed acquisitions to fuel their growth. Next, pillar number 7, we're looking at how the company uses leverage. So specifically, we are looking for their net debt to be below their 5-year average free cash flow multiplied by 5. So they have $28.8 billion of net debt. Multiplying 7.25 times 5 gives us $36.25 billion, which is greater than their net debt. So that is a check on pillar number 7. So far, through 7 pillars, we have 5 checks and only 2 X's. Last but not least, we're looking at their market cap and comparing it to that 5-year average free cash flow multiplied by 20 to give us a quick estimate of what would be a reasonable dollar valuation to pay for this company. Their market cap is currently $114 billion US dollars. Multiplying that 7.25 billion of free cash flow times 20 gives us a value of 145 billion US dollars, which is another check here on pillar number 8. So to summarize our Unilever stock analysis, Unilever checks the box on 6 out of 8 pillars. They're a company that gets pretty good returns on capital. They're trading just about what we'd be comfortable paying PE-wise. However, they don't have revenue growth. Revenues have been pretty much flat over the past 5 years, and they don't have net income growth, but they are retiring some shares. They're not diluting shareholders. Their free cash flow has grown over the past 5 years. They're not using excess leverage, and based on a free cash flow yield, that is higher than their market cap. So Unilever is a high return on capital business with a lot of exposure to developing and emerging markets. And despite some of its potential mishaps with management, it has a bunch of strong brands. However, this sort of fundamental analysis is just a starting point. This is used just to become familiar with a company based on its numbers, based on a quick understanding of it. This is not investment advice, and in order to be comfortable making any sort of investment, you really want to understand the business inside and out. The only way to really do that is to do the work, read through their annual reports, understand their 10K in more depth, and come to your own understanding and conclusions about the business. You should not invest in a business solely because it passes some sort of screener metrics or solely because some sort of well-known value investor is invested in that company. These are just filters that help you get a better starting point. That's it for today's stock analysis of Unilever. If you enjoyed the video, please be sure to like the video and subscribe to the channel for more stock analysis videos. Comment down below what company you want me to take a look at next. And thanks for sticking with me to the end.